did react. I mean, it was down sharply intraday, about 7-8%. I think this is a short seller report which has come through, alleging all sorts of things. Vedanta, of course, has come through with a strong denial. It's calling that most of these allegations, etc., are completely, it's on your screen, baseless misinformation to discredit the group. So let's go across to Aditya Welekar, who's Senior Research Analyst, Axis Securities. Aditya, good to have you with us here. I've not looked at much of this in great detail. I'm sure you have. So I just wanted your thoughts. What have you made of this report today? And of course, we put out Vedanta's response as well. What did you make of it?
Yeah, good afternoon. So difficult to make an immediate comment on this, but means I can speak from an operational perspective. So fundamentally, the company is strong and it is well placed, and it adds at the cusp of expansion. So there are various segments like aluminum segment, zinc segment, and then power segment. All these segments are the transformation is going to happen this and next fiscal, and we expect a good amount of earnings growth post this turnaround in these critical segments, especially in aluminum. Once they acquire the raw material integration, and then they expand the zinc smelting capacity and post their power plant commissioning. So all these things are operational, and that will surely drive the profitability of the company. Their free cash flows will increase. Also, their focus on deleveraging is also there. We have seen in last couple of years they have deleveraged their parent Vedanta Resources debt by almost $2 to $3 billion. So currently it's at $5 billion, and they have a plan to further reduce it by $2 billion additional. So the focus on deleveraging is there. At Vedanta Limited also, their net debt is almost near around 53,000 crores, and they want to keep it under 1x net debt to EBITDA. So looking at all these things, the company has achieved a good turnaround. And the future also looks pretty operationally stable as such.
Aditya, just allow me a second here, and it's really important that you brought up the point on debt, because the central issue in this report that Viceroy has put out, I'm just quoting certain parts of it. I mean, they've used very, very strong language, so adding that caveat, and I'm just simply quoting, not even paraphrasing, saying that comparing the Vedanta parent, I mean, their issue is with VRL, Vedanta Resources, saying that, VRL is akin to a financial zombie or a parasite being kept alive by transfusions of cash from its subsidiary Vedanta. And they go on to say that, servicing the VRL debt is its own, a burden. Saying VRL's actions to meet its short-term obligations directly impair its creditors' long-term ability to recover their principal, a situation that resembles a Ponzi scheme. So very, very sharp language and harsh words over there. But to go back to understanding the debt interlinkages, Aditya, you said that Vedanta Resources' outstanding debt is $5 billion, right? Now, we don't know whether the listed entity, whether it's a guarantor to that debt in any way. What more can you tell us about the debt interlinkages between the listed entity and the parent?
So for parent, means you are right, means the parent doesn't have a direct source of cash to refund that debt. So it depends, the parent is dependent on the Vedanta Limited Indian listed company and Hindustan Zinc. So they get a brand fee, and the dividend upstreaming happens from both Hindustan Zinc and parent Vedanta Limited. So that is their only source of income to repay that debt. And I think they have done a restructuring activity on their outstanding debt and bonds. So that has given some comfort. But it is true that at resources level, there is no source of income to repay that debt directly. It is dependent on the performance of
the Indian listed entities.
Yes.
Yeah. So are there any immediate near-term repayment obligations? Because the thing is with Vedanta Resources, every now and then we have the situation where, some bond payment is coming up and the market wonders whether it's happening or not happening. And then eventually it's gone through up until now. I mean, we haven't seen a major default. Are you aware of any? Yeah.
No, I don't think so. That scare of immediate bond default was there sometime last fiscal, but that they have managed to spread around the bond repayment schedule quite well now. I don't think the immediate liability is there or any maturity for bonds is coming. So bonds are slightly critical, once they come for a repayment. Loan can be restructured, but what I recall is that their debt maturity is quite spreaded, and near-term challenge I don't foresee as such.
Okay, so that takes care of the debt issue and the debt questions that we had. One final point, let's remember this report has come at a time when Vedanta is going through a demerger, right? They're supposed to come up with different entities. Do you see any implications in the whole demerger exercise? You're overall positive on the stock, I guess, right?
Yeah, means operationally and fundamentally, the stock, the company has and the management has turned around the stock quite well, the company quite well. And operationally now it's at the cusp of execution. Means if they execute all these projects, the backward integration projects at aluminium, their power expansion and zinc expansion well, then definitely the cash flows should improve and this leverage issue should sort out in future. So that is the perspective. So we have to see from that angle. And as far as demerger is concerned, I guess there was some news that some issue was raised by Petroleum Ministry, but we have to wait and see. I think August 20th, they are once again, we will get some clarity what happens on that front. So demerger is one trigger where we can see some value unlocking, especially with respect to aluminium division. But yes, these are the issues which the stock has almost grappled with last several years, and it remains a kind of overhang on its performance. And so we have to wait and see. Means these issues will persist with the stock until we see a clear path where we can see that the deleveraging progress takes a front step and the debt at the parent level reduces substantially. So that is a key thing. Means now it's at $5 billion. If it goes down to $1 billion, $2 billion, then the comfort on the stock will increase further. Until that, all these issues will keep on, these question marks will be raised.
Okay. All right, Aditya. Thank you very much for the perspective. So let's see what the next couple of days bring, whether this issue simply stabilizes from here on. We'll take a break on that note. Thank you very much for joining in. And thanks to, of course, Dinshaw also for being with us today. Quick break. Come back on the other side. We'll get you all the buzz from dealing rooms and then some final trading calls with Mitesh.